Hey TMFG community, John and Carlo here with another episode of Ask TMFG. So if you do like our content, please do subscribe to our YouTube channel, provide us with a comment, with some feedback, or give us a like. John and Carlo here, and in this Ask TMFG episode, we'll be discussing market volatility and when is the best time to get money into your portfolio. With all of this uncertainty in the market, it's tough to find the right time to get in. John is going to walk through a couple of points to consider when discussing when to get into the market. John?
Fantastic. Thank you, Carlo. So like you mentioned, it's been a rocky start so far to 2022. And it's been a difficult one for investors. That may be due to rising interest rates, war in Ukraine, supply chain issues going on right now with COVID-19. The stock market has seen an initial drop in the first 4 months. However, when you compare that to last year in 2021, we had an excellent year in the market, excellent returns, leading actually many major US, Canadian, international stock markets recording all-time high values. Now, listening between those two situations for the stock market, which one would you be more inclined to invest into? Well, our human nature or human instinct tells us that 2021 was a better year. Therefore, markets were doing well, and it's easier to justify investing more at that time. Well, that's just our natural cognitive biases misleading us again. And you may have heard us say it before, but human beings are not wired for investing. In basic financial terms, you want to buy low and sell high. And so looking back at our two options, maybe 2022 now looks like the better buying opportunity. However, in our meetings that we've had with our clients today, we see those biases coming up again, and there's concern over investing in a down market, even though we know it's the best time to buy. So if you don't want to take my word for it, we look to the most successful investor of our generation, Mr. Warren Buffett. Now, that billionaire investor went on his biggest stock buying spree in at least the past decade, undeterred by geopolitical turmoil or fears of runaway inflation. Those market factors prompted the S&P 500's worst quarter in 2 years in Q1 of 2022. But Warren Buffett kind of ramped up his investments at that time amid the uncertainty, making a $41 billion net stock purchase over that period of time, making that the biggest investment he's made since 2008. Now, down markets, that's a great example of how down markets should not deter us. Instead, it should be seen as a buying opportunity as shown by Warren Buffett. And really, that's the beauty of investing in a globally diversified portfolio. We know the longer you hold that investment, it's going to be worth more in the future than it is today. And when you're buying when the markets are down, it essentially means you're buying a little bit more than you would have otherwise. Now, with any investment in the stock market, you should be prepared to stay invested for a long period of time. As you see in this chart from the Dimensional Fund Advisors, the good years, or what they consider the bull markets, outweigh the bad years, which are the bear markets. And those that stay disciplined and stay invested for a long period of time are rewarded for doing so. So with that in mind, I leave you with a quote that's always resonated me in times like this in the market. It's be fearful when others are greedy, but be greedy when others are fearful. So it's a very contrarian way to think about just investments as a whole, but that's what's going to lead to success for investors, the ones that are willing to take risks when the markets are unstable, but are willing to hold their investments as well during those periods of time.
Thanks for your insight, John. Always good to see the numbers from professional firms like Dimensional, just letting us know that being in the market, and regardless of timing when to get in and get out, is the best time, being in the market. So appreciate all of that. Investing is hard, emotions take hold. If investing was easy, everybody would make money in the market. So again, thanks for your comments, John. That's another episode of Ask TMFG. Like we said before, please do subscribe to the YouTube channel. If you like our content, we'll start showing up a little bit more in your feed. We've got the other two videos, a couple more videos that you can view down here on the screen. Give us a like or provide us some comments and some ideas if you'd like to see some other topics for the next Ask TMFG episode. Until next time, I'm Carlo Cancino.
I'm John Iaponetti.
And this has been Ask TMFG.